Most traders do utilize support and resistance, yet almost all of them make the exact same mistake. They draw static lines when the market is dynamic. Volatility changes, the structure changes, and that perfect line simply stops working. And that is exactly what this indicator was invented for. Today, I will be demonstrating the swing structure bands from Chart Prime, a powerful tool that generates adaptive support and resistance zones. These zones are meticulously based on the actual market structure as it unfolds rather than arbitrary levels. If you want to stop guessing tops and bottoms, start reading institutional movement, pay close attention until the end of this video. Alright, first things first, we're here on the BTC/USDT chart, which is the crypto Bitcoin, but you can use it in any market, Forex, stocks, cryptos, whatever you prefer. I'm on the 15-minute chart. It will also work on any time frame. Head over to the indicators section and search specifically for the swing structure bands indicator, and it'll appear right here for you. This Chart Prime option, just click on it and it will plot directly onto your chart, just as you can see it on mine here. As soon as it loads, three things will grab your attention. Upper bands in a bearish market color, lower bands in a bullish market color, and swing high and swing low markings, clearly showing where the structure truly reversed. Additionally, you'll observe diamonds that indicate reaction zones, not breakouts. This indicator diligently tracks the latest swing highs and lows, constructing dynamic bands that expand and contract with the market's evolving movement. So, unlike a 50 or 200 period moving average, the distance and length of the bands adapt to the current swing, in other words, to the market's volatility. That's why it follows the price much better than traditional channels. But remember, this is not a breakout indicator. The diamonds show price reactions at structural zones. Buy when the price reacts and crosses above the lower band. Sell when the price reacts and crosses below the upper band. I keep the settings as they are by default, but should you wish to adjust them, please note that a longer period will result in a smoother display. The shorter it is, the faster it will be, and you will see more price changes on the screen. Now, how do I usually trade with this indicator? But before we move on, many of you often ask me which brokerage I personally use for trading in the Forex market, stocks, or even cryptocurrencies. And the answer is EXNESS. To me, it's the best and most comprehensive broker available on the market. If you've ever gotten mad at your broker, you'll get what I'm saying now. Many brokers are slow to execute orders. On EXNESS, trades execute instantly. Other brokers often charge extremely high spreads. On EXNESS, the spreads and fees are truly remarkably low, among the absolute lowest you're going to encounter anywhere in the market. Ever waited days to receive a withdrawal? With EXNESS, the money arrives almost instantly. And best of all, you can adjust the leverage almost infinitely as you wish, obviously staying in control. The risk. So if your brokerage freezes, overcharges, or delays payment, it's time to switch. The link will be in the description. And like I said, for me, I consider it one of the best brokerages with the lowest fees on the market. I'm going to add one more indicator to this, and that is an EMA. We're going to navigate to the indicators section and search for EMA. You'll input exponential moving average, and then we'll proceed to its specific settings. Let's set it to 300 periods. We can then change its color here to white, increasing the thickness slightly for better visibility, and after that, we can click OK. Now, when the price starts to form an uptrend structure, and it's doing so above the moving average, that's when we confirm an uptrend is in play. When the price starts forming a structure below the white moving average, we are in a bear market. Considering this, we will only want to buy when the price structure is above the average and sell when it's below. It's as simple as this. What do we need? When the market is moving upwards, forming this structure above the white moving average, we absolutely must see the price retrace back to this specific swing structure point. Right here, it made its entry into the designated zone. We need to observe it moving out of the zone, ideally with a green candle appearing, and simultaneously it should indicate a green diamond signal to us. When it does that, at this green diamond signal, we're going to put in our entry. Our stop loss will be placed a little below the indicator zone you see, which was right here at 0.56, and our target is set 2 times higher than that. So that's going to be about 1.20 something here, and the price actually hit that point shortly thereafter. Now, during a downtrend, it's the exact same scenario, just reversed. We'll observe the price action occurring below this white average, establishing a clear downtrend. The moment the price comes back into the purple channel, we need to observe for the purple diamond signal to appear, along with a candlestick breaking out beyond the structure. This candlestick and the one that printed the diamond signal mean our entry is on that diamond candlestick. We set our stop loss slightly above the indicator structure. Our target was placed 2 times lower at 1.50, and the price came down, hitting our target profit right below it, demonstrating just how incredibly accurate this indicator truly is. However, this indicator is not intended for chasing the price. Instead, its purpose is to clearly highlight where the market structure typically reacts during periods of both rising trends and declining trends. Remember, this isn't an investment or indicator recommendation. The financial market is risky, you could lose money. If you lack experience, seek professional help. If you like this video, subscribe to the channel, turn on notifications, and comment more indicators for me so I know you like this type of video and want to see more indicators like this one here. Thanks, and see you in the next lesson.